Hi, Brett. How are you doing today?
I'm well, Gilbert. Nice to see you.
Nice to see you again. So, for some of the audience who haven't heard from Scottie before, new to the story, can you tell us a bit about the background overview about the company Scottie Resources?
Sure. So, Scottie Resources is a an exploration company just in the midst of turning into a development company as we speak. So, I've been operating this company for about 10 years now. It was existing before I took it over. I was an investor that took over this company, but what it was a exploration property in northwest BC in the Golden Triangle. And the highlights of Scottie, it was a past producing mine. If you want to find gold, you go to where it was found before. And the interesting thing of Scottie is it produced a half ounce per ton for a very short period of time in the early 80s, and economics shut it down. It wasn't that they ran out of ore. In fact, like how we do the mining business today, is you got to find a real big deposit before anyone wants to put any capital into building a mill. But back in 1980, Don McLeod, very famous miner in the world, the godfather of the McLeod family, and he found a vein on surface at Scottie and started mining. So we never did any property-wide exploration, but in 1980, gold was hovering, getting close to that $800 range. And the fatal flaw for what Don did is he borrowed $20 million from the Royal Bank of Canada
Hmm.
at 22% interest, because that's what interest rates were back in the 80s. So when the commodity price rolled over in 1984, I think it was just over $300, even though it was producing a half ounce per ton, he couldn't get out from under the weight of that debt. So that was the opportunity I saw. And then I got involved before the power line was being built to the Bruce Jack mine. So I was going, infrastructure, past producing mine. So that's the nucleus. That's how it all started. And that, I took this over in 10 years ago. This is my 10th season, 2016. So, but what we've done since then is we've assembled a big package, so it's district scale type piece of package. And then we've done property-wide exploration for the last 7 years. We just finished our seventh drill program. You've seen a few of these results that have come out as of late. We've probably put out, I'm not exactly sure, Gil, but probably 15 holes. And I'll have 120 holes drilled. So we still have 100 holes I haven't seen. And because what we have found with Scottie, we've found very high grade, but really importantly, on surface, very accessible high grade ounces. And so we've kind of adjusted our strategy from being an exploration company to developer, because there's a mine permit associated with the Scottie project. And so we've been working, as you've seen, on this DSO, a direct shipping ore scenario, because one of the things we found over the years is we're the closest gold project on the whole planet Earth. There's nothing in Africa, nothing in South America, as close as we are to a deep water shipping facility. So when the lights came on, or we understood that, then we started going, wow, and we reaching out to metals traders and going, is this a possibility? And then, as you saw earlier this year, we signed a very good deal with Ocean Partners, who's a metals trader, became our largest shareholder, given us a $25 million US facility for the final mile of building this mine, and also a contract to buy all the ore. So I think that's the message we want to get out to people, is like, oh, great. Yeah, we got great drill results, but we're going to sell ore, and we intend, we believe, knock on wood, I don't see any headwinds hitting us on this, is that we could have be ready for full production by 2028, which is not that far away. Right. So
Yeah,
that's only two
definitely.
more seasons for me. So
Yeah,
that's pretty quick for me. So
yeah,
so I think that's makes us a little bit unique. Than I think we're still, people look at us and still think of us as a exploration company, but truly what we're going to see here, and especially in the next 3-4 months, my PEA is coming out. One of the things we did this summer is we got a bulk sample permit for a 10,000 ton sample. Well, we did that mined, and I was shocked how easy it was to mine that 10,000 tons. And currently, right now, Scottie has 45 or just call it over 4,000 tons because they're wet tons and you have to dry them out before you put them on a boat. Sitting at the dock right now. I am patiently waiting on assays for my ore pile because then I'll be able to sell that. And I think that will be great that we receive money and all that's fantastic, but it's more the proof of concept of the bigger project as a whole. So we're going to be able to demonstrate the ease and all the things that you want to look at with the ore. So sure, we can mine it. We know it has this much gold, but you really need to understand how it is that you can transport this and stuff. So it's been a great exercise. It's going smooth. And like I say, I am patiently waiting for those assays and I'm excited just to see what that assay of that pile is, because it should set the stage for then people will go, wow, this thing's going to make, I think it's not the biggest mine in the world and everyone wants to compare, this to this to this, but with all our infrastructure, and we've come out with an MRE this year of 700,000 high grade ounces, but we're so under drilled. Like we did that for only 55,000 meters of drilling. So we can continue to add ounces. And I think the people should see that with the results are as consistent as they have been. I don't need any better results. I just need consistent results that we've had for the last 6 drill campaigns. And we don't see anything that's deterring us from that thought right now. So we're pretty excited.
Yeah, yes, Brad. So just let's talk a little bit more about the drilling results that you put out so far. So what are some of the key takeaways from the recent, in terms of the results at the Blueberry contact zone here?
Okay, so yeah, really great results. I mean, we had our best intercept we've ever had at the very beginning of this year, and it was, oh, I already forget. It is 30 grams over 24 meters or something like that. And that's a fantastic hole, eye-popping hole. But what a lot of the project this year is we're not really doing exploration. We're taking that inferred resource. If we're going to a feasibility study, I have to have it at an indicated level. We have to have more certainty on how much gold is there. But as you see, as we're doing these infill holes, so we're doing 25-meter centers. So all the holes have to be at least 25 meters apart from each other. So we're coming up with these fantastic results, which suggests to me that grade underground might be a little bit better than even that initial MRE. In fact, this PEA that's coming out very shortly is already outdated because it's not going to include the over 25,000 meters that we've completed this year. So, but it's great. We're showing people progress. We're kind of playing with our cards face up and going, okay, it's not the big, oh, what's this going to be worth? And oh, it could be. We're going, this is what the ore is worth. It is extremely profitable. And then, so that business case should be laid out with that PEA. And then we go right to feasibility. We're not doing a pre-feas because it's such a simple project.
Yes, that's great to hear. So those were a few, a couple of near-term milestones that you talk about, right? So you now go from exploration to the development stage. You're doing the bulk sampling and the upcoming PEA. So are those the main things that people should be looking for in the next few months?
That's right. I mean, we'll have consistent news coming into all the way through into the new year for sure. And there's one other catalyst that we didn't mention. It is a big part of our strategy is ore sorting. And the reason ore sorting, it appears to be working extremely well for us, but also one of these catalysts that we will see in the very near future, like maybe next week. I don't have the information. I'm waiting for somebody, but it's a feasibility level ore sorting study, meaning it's not a desktop, right? I mean, we sent 800 kilograms of rocks to Saskatchewan and to South Africa to run it through 2 different technologies, XRT and an XRF. And what we're seeing, and those numbers are going to come real quick, but because our gold is very fine grained, very little visible gold, very consistent gold, and it's all encapsulated in peritite and pyrite, which is just a denser material. It's heavier than the host rock. So when you're sorting, it's not optically looking for a piece of gold in quartz, like a classic quartz vein system. It's just really heavy rock, light rock. Keep the heavy rock, and then the machine throws away the lighter rocks, which is a lot of the inputs is moving ore, and you don't want to move waste, right? And you don't want to process waste in your mills, right? So that ore sorting is a really big key for us, because if we're going to ship it to Asia, to Taiwan specifically, is where this ore is going to go. And Ocean Partners is the only metal trader in the world that has a blending facility in Taiwan. Like most of the Glencores and Trafigura's, and if they blend ores, and it's a really profitable business blending ores, because what you're doing is you're making a chemical composition to fit a specific smelter in Asia. Now, you might know, I'm assuming because you're Asian, but China has built too many smelters. And what that is opportunity, because those treatment charges are very competitive. So it's really, really affordable. Like they need product. And our product metallurgically fits to go into a copper smelter quite well. And the recoveries are much better than you would from a CIL plant or a flotation, right? In a smelter situation, you're recapturing everything. And so it's quite an interesting business plan. And again, with the support of Ocean Partners, and like, again, I have a contract for them to buy the ore. What we're able to do is, when we get to next year, when we get all this stuff done, is we can price the ore, because what I've always been frustrated with the share price of Scotties, we've been doing all this great work, but the share price never seemed to work out. And maybe everyone thought that I was a natural fit for the Ascot mill that's had troubles beside me, or whatever they were thinking. And all I could think about as a CEO was, okay, this ore is very high grade, very easy to get to. All the infrastructure is done. We need to get a valuation so the market can understand it, not just a guy like me talking. Here's some math. This is what that ore is worth. And from there, then we'll be able to extrapolate that it's a very undervalued company. And, even if I got 10% of the price of the metal, our market cap today would be 350 million, easy, without any new exploration, and like I say, we did the biggest drill program ever this year, and that won't even be calculated until next year into the updated. Like the PEA will already be outdated, but we're excited to get it out. Yeah.
Yeah, that's great to hear for the strategy. Let's talk a bit about the location and infrastructure. What are some of the advantages? You talk about this, Scottie Gold Mine before in the past, because you don't really need to build any new things or certain infrastructure already in place. Tell us about that.
Yeah. So one of our biggest advantages across any project is our infrastructure. Past producing mine, permitted, 7 kilometers of underground workings, a very competent rock, road access. There's a power line right on the border of Scottie. Like, so it's, most people, if the power line's 10 kilometers away, they're like, wow, what a benefit. We just look at the power line. We got to make sure the helicopter doesn't hit while we're working. It's right on our property border. Again, a road, flat ground in the Golden Triangle. It's not easy to find flat ground. So we kind of have everything that you would need. And then how you look at it from an investor is, there's no road to build. There's no mill. There's no tailings to build. So that CapEx comes way down. And in fact, what you'll see in our numbers when we put the PEA out is tax is our biggest line item, because it's just a real easy project. And then and another one that the viewers should notice is earlier this year, we brought on another team member, Sean Massey. Now, Sean Massey's last job, he was the general manager of the Bruce Jack mine through Pretium, through Newcrest and Newmont. Before that, he built the New Afton mine, right? Canada's only block cave. Maybe it's North America's only block cave mine. He is also part of the Arico Comess deal in Barkerville. So for a mine engineer who's built and operated that many mines in BC, we could not have a better person. Again, this is so easy. This small little project for what Sean's, he had 2,000 employees at Bruce Jack. And the investors should think, why in the world would Sean Massey come work at a little tiny $100 million company? I mean, the guy was running the Bruce Jack mine. He could go anywhere in the world, but he knows the area, wants to stay in British Columbia, and he sees the possibilities of what could happen with Scottie. If we ever got that traction, I mean, I'd love to put 10 drills on the property. I have the targeting for it, but I just can't blow my shareholders up with dilution. And so if that, as our stock price is starting to finally move up for after 5 years, we've got a very healthy treasury right now. And so we're firing on all cylinders, and very good investors. I've got some of the best investors in the world. Ross Beatty owns 5% of my company. Franco-Nevada, not only did they buy a royalty from us, they're also equity shareholders. Kevin Jennings is my second largest shareholder in the whole company and does all our financial modeling. You might find his equal in the world, but you're not going to find anybody with more financial modeling experience than Kevin Jennings. I mean, he was a CFO Barrick Africa. He was a principal at Xstrata. He was a key player at Noranda. He, at 27 years old, restructured the Horn River smelter. Like, that's Canada's copper business ultimately. And he was the guy who actually led it, restructured the whole thing. And this was to be about maybe 25 years ago, if people remember back then. So we're in really good hands with Kevin, really supportive shareholder base, and and they're mining people in that our treasury. So they're not, or I hope, you always hope these things as a CEO, but I would say, I feel very confident 70% of my shareholders are there for a transaction and not to trade it out if it goes up, 50% or something like that. They're all well-heeled, all know this business well, and they all see, the dream that we see. And so we've got great support from some of the most credible people in the industry. So we're very, we feel blessed, and we're happy.
Yeah, so the final question I'd like to talk about is the share price. So you've been trading in the 80 cents and 90 cents for quite a while. And since August, we've seen this rise on your performance there. So can you tell us what sort of factors that are contributing of that reason, or besides, of course, gold prices going up too?
So, you can never get the timing right, Gilbert. And the Ocean Partners deal, I thought I would have had done in May. Okay. But we had multiple offers from multiple off-takers or whatever, metals traders. And so it just took a little bit longer than it always does, right? When you paper up these deals. And it was substantial. At that time, we were a $50 million market cap, and essentially Ocean Partners committed $50 million or $40 million Canadian. That's a $25 million US facility. And then they gave us $6 million hard dollars for shares, right? And so you look at that and you go, wow. And then I think because that closed in the mid-July, maybe the market wasn't paying attention. But I think, as people read the news, and then we started getting a lift, because the lift happened before I put out, I've put out 3 really good news releases since then on drill results. And so I think, and people are excited, of course, when you see your stock go from 88 cents to $1.70 or what be it, you get excited. But then how I look at it, I'm going, oh, it's great. We're just catching up. I mean, it's a $110 million market cap. I don't look at the stock price. I only look at the market cap, right? And then extrapolate from there. And I think, there's a lot more room. There's a whole bunch of stories out there that have $300 million market caps that certainly wouldn't be able to provide. And I'm not saying they're not good stories. I think they're great stories, but we're still lagging very much so at this price. And then, so we kind of had that little spike up. And what I'm happy is, you don't want to keep going up forever, because we know what happens to those stocks that go parabolic. They come down parabolic. And then we started basing at, for the last 2 months or the last 6 weeks, we're kind of in between this $1.70, $1.80. I love that, because we're getting, and with good volumes, right? I mean, this week I've traded well over 1 million shares this week without a doubt. No real movement up or down, but from a technical point of view, we're building a good base. And so now this launching pad here, from a technical point of view, is going to give people confidence that they can see this moving up in a measured way, in a nothing too crazy, because, it's just like a pendulum. It goes this far, you go too far, you go too far. So I'm really happy with just kind of how it's working out. We have all these catalysts coming, and it's when the analysts have to start comparing companies. And I think this is going to happen now, where, the analysts, you know, they pay attention to you because they make their money, they raise money for you, and everybody stays in this nice band, so nobody feels that they're taking too much of a risk or sticking their necks out. What I believe is going to happen in the future for our industry, and our industry as a whole, majors all the way down to the small companies, is I see the S&P rolling over, and you know how money works is all these the Wall Street crowd. They only make money if they make money for their funds, and then they get their bonuses. So the bonuses are coming for these guys next month or in the next 6 weeks. And I believe the rotation into cash flowing businesses, they cannot deny, because are they going to be able to make the same returns in the magnificent 12 or whatever you want to call, the usual suspects for the 10 stocks that really comprise the whole S&P, like 90% of it. Those things are tailing off. Nvidia just can't be at $18 billion, it just can't keep going up forever. So I see a rotation of money, because I've never seen mining companies ever be this well run and cash flow. And I've been bought my first mining stock probably in 1990. So I've been doing it for a little bit. Yeah. A little while now. But what I see is I haven't seen companies run as well as they are now, because historically mining companies were the worst run companies in the world. It's party time or on, off, a lot of waste within these companies. That is not the case anymore. In fact, what they've learned is that they're gun shy. They hardly take any risk, and they've put it down all onto us little junior exploration companies. Because I always said, I'm an exploration company for a major. I just don't know which one, right? Yet, and so, but what you see now is, even my Barrick has doubled. Like Barrick was my dog in my portfolio for the last 10 years. It just never. It was like Scottie. It never moved. It just stayed at the same price. But even it's doubled in the last 9 months or something. It was $23 forever, and I think it's 46 right now. And of course, Newmont's, and so we've done really well on these majors, mid tiers. But you can see it starting to trickle down, and there's a lot of great stories, especially in BC. You look at TDG, man. Fletcher just got to a $400 million market cap because of closology. He's in the right area. You've got Bob Dickinson's project, Thesis Gold, and it's all in that area. So I like seeing that. So you see, there's a lot of stories looking in the Golden Triangle, like Skeena's probably $2.6 billion market cap right now. And it was a $50 million market cap 6 years ago. Right. And so things in our area working. You got Goliath is being done very well, and you've got Dolly Varden has done very well. And so we're in the area where success is allowed to happen. And I think when these analysts actually start picking it apart, and that's what we'll be able to provide with the PEA. We're going, here's the business case. I can mine it for this, and we're going to get paid that. And so it's a very nice cash flow model from what we can see right now. But understand, it's not our internal work, even though we're more than capable to do that internal work. It has to be done by somebody else. And we've been working on that for 6 months now, and that news should be coming out soon. And it's working out quite well.
Definitely looking forward to those upcoming milestone and news. Brad, it's great to be talking to you today.
Always good to see you, Gilbert. Appreciate your time.
Yeah, so let's catch up in a few months' time or so. Next time. Good stuff.
Okay, thank you, sir.
Talk to you soon.